All right, we're back. We got the roundup. Santi, you're Cycle City today, huh?
I am. I love cycling. So I'm doing some training in high altitude and living the life, man. When you see me smiling like this is for two reasons. One, obviously crypto. Two, cycling or running. Just doing sports. Is just...
Yeah, I can tell you got that rider's high going right now.
But it's a lot like seen and legally blonde. It's like endorphins make you happy. Like, I'm the kind of person that if I'm not doing exercise on the daily, I mean, I do rest once a week. But it's I go crazy if I don't do it.
Yeah.
I get so much out of it.
How many miles are you cycling, or kilometers, I should say, for you Europeans?
Today I cycle 130K. I'm in the Dolomites, so did a lot of climbing. Yesterday I did 105K. So
130? That's what, 70 miles, 80 miles?
That's like 75 miles, yeah, give or take.
Yeah.
So 70, between 60, 70, 80 miles each day. Now, not every day is like really long, but when I'm here, I'm not here for many days, but just the amount of cycling, it's like the most beautiful mountain range in the world. And I've been to the Himalayas, I've been to all mountain ranges everywhere, really. South America, North America, every continent I've visited and climbed mountains. I think the Dolomites are the most underrated, even more beautiful than the Alps. Just incredible scenery.
That's gorgeous, man.
If anyone ever gets a chance to come up here, easy access, and it is unreal.
Love it. Well, you've been paying attention to a little big week for Bitcoin, huh?
Very big week. I mean, there's a lot to cover in this episode. Of course, the ETF approval seems closer and closer, particularly given the ruling with Grayscale. We'll talk about that. Related on the regulatory side, I mean, crypto just keeps winning. There's a second big, the Uniswap paradigm kind of dismissal class action where they're trying to be pinned on trading of these like quote unquote, shit coins, but the court dismissed that. So that's a big win. We'll talk about that as well. We won't delve too much into that because we're having a regulatory pod next week. So we'll save a lot of the meat for more credentialized and competent people to comment on this stuff. But we'll touch on it. And then, of course, related to Coinbase, I mean, you were the one that brought this to my attention. There's a great, Brian Armstrong has been more vocal these days. And I think he put out kind of a request of, hey, things I want to be seeing built. And so we'll comment a lot on that. I think that'll be the substance of the episode. Does that sound good to you?
Yeah, that's great. Yeah. Let's talk about Grayscale first. So let me just tee this up maybe a little bit. So actually what is it? Yesterday on Wednesday, the Grayscale won a big thing in the courts against the SEC related to their ETP or ETF. I think just before getting into like what that ruling means and what actually happened, just to tee this up a little bit, since I've been in crypto, people have been basically applying for Bitcoin ETFs. And I think the first one was the Winklevoss twins, actually, back in remember when that was? 2013 or 2014, I want to say. I think it was 10 years ago. Early. Yeah, I think about 10 years ago. It's been more than 10 years since the Winklevoss twins applied for the first Bitcoin ETF. And since then, there have been a number of firms, ARK, Van Eck, Bitwise, Grayscale many times. And
ARK, BlackRock too.
And then obviously the most recent one was, I think when we started to realize that like this actually could move forward and there actually could be a BlackRock ETF or a Bitcoin ETF is when the June BlackRock ETF filing, right? Because June BlackRock has filed for 550, 600 ETFs, and I think they've only lost one of those. So that was kind of the signal to the market, and we talked about this back in the June roundup, that was kind of the signal that they knew something was coming, right? They knew something was going to happen. So what happened in this Grayscale case is that let me just kind of tee this up. There are two folks who had great threads. As always, Jake Travinsky, who's going to join us next week, and then Marissa from Blockchain Association. So I'm just going to read some of Marissa's thread and kind of quote from this. So to set the stage, Grayscale was not the first, like we just talked about, to seek approval of a spot Bitcoin ETP. Several others have. The SEC has denied all of them. But importantly, and this will become important later, they have approved 2 Bitcoin futures. Evidence demonstrates that there's a 99.9% correlation between spot and futures market prices. So for this denial of a Bitcoin ETF to be proper, right, because they've approved the futures, but they haven't approved the spot, the SEC must have a reasonable and coherent explanation for the inconsistent results for why they're approving Bitcoin futures, but ETPs, but not Bitcoin spot. Otherwise, they acted arbitrarily, right, and opinionated, which this is not supposed to be. An opinion is supposed to go off the law. And so in denying these proposals, the SEC found the products were, quote, not designed to prevent fraudulent and manipulative acts and practices. So what does that actually mean? What it means is that they're saying that the size of the market was insufficient to prevent fraud. So they're saying the market is not big enough to prevent fraud in the market. So to remedy this, the SEC required a surveillance sharing agreement with a related and regulated market of significant size. And according to the SEC, every spot Bitcoin ETP proposal so far has failed to satisfy this significant market test. So that is kind of what the court was looking for. The court was looking for whether the SEC coherently and reasonably explained why it treated spot and futures ETP approvals differently. That is what they lost. They found that I think there were two kind of attack vectors in the courts here. If I'm the Grayscale lawyers, I think the two attack vectors they were going after were, one, the SEC never explained why Grayscale owning Bitcoin rather than Bitcoin futures impacted CME's ability to detect fraud. It claimed there was a difference, but the SEC kind of failed to back that up. They claimed it, and then when challenged, they couldn't back that up. And then Grayscale provided evidence that fraud in the spot market would present identical problems in the spot and the futures ETP, right? So if there's fraud in one market, because there's this 99.9% correlation, there's going to be fraud in both markets. And the SEC basically, again, they didn't really dispute that. They basically just said that the correlation analysis had insufficient evidence without explaining it, though, and that's not enough for the court. So the court agreed with Grayscale here. They said the SEC's unexplained discounting of the relationship between the two markets, so the spot and the futures markets, falls short of the standard for reasoned decision making. So that was the first attack vector. Second attack vector, the SEC failed to explain how the proposed ETP would be the predominant influence on the price of Bitcoin futures traded on the CME. So the SEC's attempt to kind of connect the value of Grayscale's assets to impacting the price on CME was unreasonable. And again, the court found that despite Grayscale's demonstration to the contrary, if the SEC thought Grayscale would be the predominant influence on the CME's market, the SEC kind of failed to sufficiently explain that conclusion. So bottom line, I know it's kind of a long tangent here. The SEC, the court found that the SEC failed to treat like cases, the two cases alike. It concluded that CME was a large futures market as it approved the futures ETP, but then it failed to explain why the reasoning does not apply to Grayscale. And in the absence of a coherent explanation, this unlike regulatory treatment of like products is unlawful. So boom, Grayscale wins. Would love to hear we've been at this for a decade. Would love to hear just what you kind of felt in this moment here.
Well, I actually want to ask you first, which is, and I'm cheating here, where can the path for an ETF approval be further derailed? Right? Because I think a lot of people would have looked at this and said, clear runway. It's imminent. The crypto prices, of course, reacted very positively on this news. And then have dipped some. But certainly Bitcoin was up, I think, up to 7%. Almost immediately, like in a few hours, and then other assets kind of rallied accordingly. But Bitcoin was leading the chart. So, the question for you is, what else at this point can be a roadblock for the approval of an ETF?
Yeah, good question. So, moving forward here, the ball's in the SEC's court, right? And a lot of it depends on whether or not Gary Gensler wants to fight or fold. So the decision whether to appeal, this is my non-legal brain here working, this is just my understanding. The decision of whether to appeal or not to appeal, they have 45 days to make that decision. If they appeal, so if Gary says, look, I don't agree with the courts here, I'm going to appeal, the order will be stayed until a decision is made on that appeal. However, in that time, there are several other Bitcoin ETFs that they have to make that are going to be filed, right? ARK and Bitwise and BlackRock and folks like that. And actually, I think ARK is the first one that's going to come due. So ARK filed back in, I think it was May, maybe April or May. You have 240 days if you're the SEC to make a call on that. So what is 240 days after that? I think that's like January, right? I think they have a deadline of January 2024. So that's one thing, is like they could appeal. They could fight this. The other thing is that they could actually not fight this, but come up with new rationale to get Grayscale to, which would then cause Grayscale to sue them again, and we go down this path. So they can't use the argument of, hey, this is not a market of sufficient size to prevent manipulation. Can't use that, but they could try to find something new, and then we'd go down this path again. Grayscale would fight them again. Now there's a third thing, which is I think they could actually probably rescind the futures ETP, but I don't see them doing that. Yeah.
Yeah, I mean, it will certainly be interesting. And so basically what you're saying, because a lot of commentators said, hey, we could have an ETF relatively soon. There's one account that said that. There's another one that said, like you were saying just now, which is most likely Q4, Q1. But the market is a discounting mechanism, and they also assume it's an ETF, and will get approved within the next weeks to 6 months, if you will. But yeah, it does sound like it's the SEC can draw this out. They certainly have done that in the Ripple case, right? They've said that they're going to appeal it, I believe. And so yeah, that would be interesting to see. The thing that I also looked at was, and we've talked about in this pod, was the discount of the Grayscale products compressed pretty dramatically. This is GBTC in particular, which is the Bitcoin trust. The discount at one point reached, this is like peak Three Arrows bankruptcy and blow up, because they were involved heavily in that carry trade. I mean, the discount on this went all the way to like 50% or so, 47%. And now it's traded, I think there's still a discount. Discount's like 17% or so, 15%. So I'm looking at that, and that's fairly interesting that is compressed, but it's still not a parity. Now, you could argue that these closed-end kind of mutual funds don't ever trade at par, but there's still a very big, if you're like a ARB hedge fund out there, I'm sure you're looking at this, and there's still a fair amount of room here between 17-15%.
I think people have PTSD. I think people have just gotten crushed on that trade for so many years that
it's the widow trade.
Exactly.
As it's famously called. There's two very famous trades in Korea. One, the kimchi trade, which is like, the discount in Korea, and then this widow trade, which has claimed the lives of many.
Yeah.
Okay, and so where are you standing here? Are you optimistic in the range of outcomes? How do you think this shakes out?
Cautiously optimistic, I would say. I think they're for the first. So if BlackRock had not filed, I think BlackRock, people can't sleep on that, and that filing back in June is super important. I think if BlackRock wasn't here, Gary goes to the mats and he fights this. I think now though there is political pressure on the SEC to approve this spot Bitcoin ETF, and this is no longer just about Grayscale. It is about all of TradFi, and I think this was Jake Travinsky who put this really well. All of TradFi is now ready for a Bitcoin ETF. And if you actually look at BlackRock, like BlackRock being in the game now, they don't file and not get this thing passed through. And if you think about Larry Fink, right, who runs BlackRock, his influence on DC, right? Think about it. He was considered for Treasury Secretary in 2016. I feel like half the testimonies of like finance CEOs are Fink, right? Testifying about COVID-19 relief, about financial regulation, about economic issues. I mean, the Fed literally hired BlackRock in 2020 to purchase billions of bonds and securities to stabilize the markets during the pandemic. Like they literally called on BlackRock to do that. He serves on the New York Federal Reserve Board. And I've seen, like, you've seen him be able to pressure. He's pressured the biggest companies in the world, and I think he's pressured some of the biggest geopolitical leaders in the world as well. Whether that's on ESG stuff or lobbying efforts, or I remember last year he pressured ExxonMobil to invest more in clean energy through all the shareholder votes that they have, so I think you can't underestimate that.
Yeah, I'm in your camp too. I mean, I think the decision for an ETF does not compute in my investment process, although I think it is very important for the legitimacy of the industry. And I think we've already in some capacity won, as you said, because because BlackRock is in the game. And I think that alone, to me, is more, perhaps even more important than the approval or not. I think the approval will come at some point. I'm not playing the game of timing. I just think that this asset class, moments like those, where you see a participant like BlackRock come in the game, is a win already for the industry. And so I'm not waiting or playing whether or speculating whether it's going to happen in a week or 6 months time or a year. I certainly think, like you, that it can be a more drawn out process. And so I kind of, in a
Yeah.
range of probabilities, I think that might be the case.
Yeah.
And
Here's why.
so,
Here's why it might be actually even fast. Here would be like if I was being. So I said cautiously optimistic. If I was being really optimistic. So when people talk about the 240-day approval for ETFs, it's actually not a 240-day approval. It's a 240-day process that's split into 4 stages. So there's a 45-day initial review window, which then they can approve or not approve. Usually what happens though is they extend it to a second 45-day initial review window, which can then be extended again to a 90-day period, which is called the order instituting proceedings, which can then be extended to a final 60-day period, after which the SEC must publish its decision. So if I'm being as optimistic as humanly possible, I mean, you can approve these things quicker than 240 days. You don't have to wait for that. So, and I just pulled up, so I mentioned ARK. There's ARK, Bitwise, the Invesco Galaxy Bitcoin Trust, iShares Bitcoin Trust, VanEck Bitcoin Trust, Wisdom Tree Bitcoin Trust, the Wise Origin Bitcoin Trust, which is Fidelity, and the Valkyrie Bitcoin Fund. So those are all set to, if you extend the 240-day window out, those are all, ARK is January 2024. The rest of them are March 2024. So look, by the end of Q1, we could have, eight to 9 Bitcoin ETFs in the market.
Yeah. Now, importantly, Europe already has these, is my understanding. Canada has 1 or 2 of these, I believe.
Yeah, but who cares about Canada?
No. What I'm trying to say is these already exist outside,
right?
And I think
there's
that
one
is
that got
important.
Jacoby Asset Management in Holland or something.
That's right. And so that my point is, there has been like if you study history, like the gold, and I've said it before, the gold ETF approval, there was a time where the US resisted that, and then it got approved in Europe, and then it came to the US. And so I think, again, we're following the same pattern here. History is rhyming. I guess like a listener might be wondering, like, what's the point of all this? Like, why are we talking about the ETF and, beyond? And I think this is a good segue into the second piece of regulatory action, the Uniswap thing, which is, you always got to wonder, there has been, I think, at this point, more harm done by not approving an ETF than there has been, presumably, any claim that you can think of what the harm would be of having a crypto ETF. And I'll tell you why. Grayscale, again, this idea of a discount, I mean, that's a huge amount of losses for people, right? Whether it's on paper or not, but it is trapped liquidity, and this discount has been very impactful for people that have invested. Whereas an ETF wouldn't have that issue. And so I think that's the thing, that if I'm some of the more vocal members of Congress here that have continued to say along these cases, I think the common denominator has been, it is up to Congress to come up with rules, because regulatory by enforcement and the lack of clarity has been prohibitively costly for crypto startups. Like, it is stifled innovation, but more importantly, it has harmed the consumer, right? You could argue, like, what's the harm of like an airdrop? Like, there's so many, that financial inclusion has been impacted on a number of dimensions, and particularly like the amount of, like, you could argue the Coinbase stock being, hit pretty hard after the SEC sued them. But more so, just the discount itself in these Grayscale products is I think one of the things that, if I'm a member of Congress, I'd be pointing to that and say it is fundamentally important that we have an ETF, because otherwise you have these things that are harming the consumer, and everything in financial regulation. And you tell me if you think otherwise, should be centered on creating fair and efficient markets, primarily fair, and like including like financial inclusion. And I think at this point, I mean, the evidence is just so clear that by not having an ETF, there's a lot of harm being done. So that's the thing that I think is a good segue into the second piece of regulatory action that we highlighted, unless you want to talk about
I actually have one
Anything
more
else on
thing.
the
I
ETF?
mean,
Yeah, go ahead.
well, this is something that we talked. All right, so ETFs. Let's think about what this could do to the market, right? An ETF, and you can. I think you brought up gold in Europe and then the US, and I think that's an apt comparison. And if you and I, like you and we are not impacted by an ETF necessarily because we can buy Bitcoin, and self custody it or keep it on Coinbase or something like that. But if you're a large institution, there are like 5 reasons an ETF like really impacts you, right? You maybe 4 main ones, like enhanced liquidity. A lot of institutions, let's say you're trying to deploy $2 billion into Bitcoin. It's very tough to do that. You have to like get an OTC, you have to get like a crypto native OTC desk and implement it like that. The ETF is going to bring enhanced liquidity. It's going to reduce the need for physical holdings. So even though you and I are comfortable holding Bitcoin and self custody, in the same way that people didn't want to hold gold physically, people don't want to hold Bitcoin. They don't want to deal with that. And so I think it reduces the need for the physical holdings. It does increase price transparency and price discovery, which institutions want. And then the potential for manipulation in a market. This just increases the size of the market and it brings like more regulatory scrutiny to the Bitcoin markets, which then I think draws more institutions in as they are less scared to allocate to that. So my question on the back of all of that is, I remember at one point we were talking, you had very little, maybe no Bitcoin exposure. I think a couple of months ago you started actually, and again, not financial advice. We don't have, not financial advice, all that stuff. Like I think you started buying Bitcoin again for the first time earlier this year. What is your current like thinking around your personal exposure to Bitcoin, especially relative to Ethereum?
I haven't changed the allocation since back then. I do have some exposure, obviously. It is meaningfully less than other crypto assets. I mean, my strategy is primarily in the private markets, is investing in early stage startups, but I do have core holdings, liquid holdings. I do think that, so I haven't like changed, I haven't added to the position. But I do think that, I mean, it's an interesting setup. And I want to go back to the kind of things that you listed out just now. When you think about what this does, we had another podcast that is coming out where we were talking about the impact that it will have on large crypto funds that basically track the index and have if you're a billion plus fund, a lot of that is held in a lot of the majors in order to deploy that size. And so historically the industry is the investors have allocated to the industry by investing in venture funds, hedge funds, and grayscale products, right? Having an ETF has, I think, an impact, you could argue, on large scale funds. Also has an impact on Grayscale if it doesn't convert to an ETF because the fees are very, very high. I mean, it's charging like a 1% fee or so, whereas an ETF charges basis points. I mean, like an order of magnitude less. And so, into the idea of price discovery and liquidity, like if there's any inefficiency in how the ETF is traded, there is going to be plenty of people arbing the physical versus the ETF, like that's going to happen. And so it just creates tighter markets. This is not tax advice, but I think a lot of folks invest, even crypto natives historically have allocated to Grayscale products through like a tax advantage account, like a Roth IRA or an RIA, which is, when you think about the ETF, I mean, that also becomes a possibility here, which is, it's fairly advantageous. Now you should go talk to your lawyer, your accountant and whatnot, but having an ETF is very kind of just more possibilities of getting access and exposure to particularly Bitcoin in this case, and have some sort of, have a number of strategies at your ability, options market, you could borrow against that, you could do it in a cost effective manner. Right. And so I think one of the things that is going to be interesting is how Coinbase, MicroStrategy, with just huge number of Bitcoin holdings, like how all these different things that have been proxies for getting access to crypto change as a result of just a pure ETF approval and access.
Do you think they are helped because it expands the market, or do you think they get hurt because Coinbase is acting as a proxy for someone who wants to go long Bitcoin, but doesn't really want to, maybe buy the underlying.
It's an interesting question. I mean, the other one I didn't mention was miners.
Yeah.
And I think miners probably get hit the hardest because mining has just been a terrible business. Like you would rather own just, I mean, in my opinion, every miner that I've looked at for a long time, I just never get my arms around why it would outperform the underlying. And I think similar dynamic happens in the oil and gas market, like exploration and drilling and exploration is a very tough business. So you'd rather own like oil, I guess, or uranium exploration. Like, you know what I mean? Like it's the mining aspect of it. Miners, I think, have a struggle challenge business. And so maybe a lot of the capital flow that has invested in those transitions to just the ETF to track the underlying performance here of Bitcoin versus an operator in the system. MicroStrategy is a bit different if you have some sort of inclination to and believe that and give any credit to like their data business. And I think they mentioned that they want to make a big play and blockchains are data rich and they historically like pivoted from and the word went like MicroStrategy over the years, like even the 90s, like has been very much like a data business and like creating and surfacing insights and processing like unstructured data and whatnot. And it went being a mobile and like reinvented its business and like, and now it's saying the same for crypto and like it's gonna like come up with a product that is processing all this crypto, like all this blockchain data and like surface insights. So if you give any credit for that, I mean, I guess, but yeah, I mean, I don't know. I mean, it's also leverage, right? I mean, they have like huge amounts of borrowings to purchase these bitcoins. So I don't know. I mean, maybe a question for you, as you are in the U.S., like where would you in the realm of possibilities? By the way, they're not mutually exclusive. If you had $100 to invest from scratch, and the options are going buying Bitcoin and storing it yourself in a wallet, buying the ETF, or some of these other options, Coinbase, MicroStrategy, miners, GBTC. Like, how would you allocate that $100?
For me personally, I'm buying Bitcoin and Coinbase probably. Like those are my two. I'm buying Bitcoin and Coinbase. Because I think something like GBTC, I'm not a trader. I don't want to, when I think about like the ARB, that is a trade, like that is someone thinking about the trading strategy there. And I don't have the mental bandwidth. I don't want to be a trader. I want to buy something and forget about it for 10 years. And I want to just that is how I invest. I probably leave money on the table, but I don't like the mental bandwidth of trying to think through different trades. I like and I like having 99% of my mental bandwidth go towards building Blockworks. So the little bit of mental bandwidth I spend on investing, I like buying things that I want to hold for 10 years. And right now that is Bitcoin and Coinbase.
Yeah.
And the thing I'm thinking
you
about
wouldn't buy the ETF?
Well, I mean, why buy the ETF when you could buy the underlying?
Well,
actually, I mean, I'm curious how GLD is done versus gold. Yeah, you could buy it in your Roth.
I mean, like and that's what I'm saying. You're in the US, and so I think you can't do that with physical Bitcoin, can you?
No, but you can't put that much in a Roth IRA, anyways. I think it's.
Well, that's what I'm saying. But you can.
Yeah, I guess if you had
Roth IRA.
Yeah, I guess you would max out your allocation there, and then. That's a good question.
Definitely not miners.
I'm not buying miners.
No.
Yeah, but so it's interesting because I think the most dangerous thing in crypto from an allocating perspective is like thinking that this time will be different, right? And if you look at all the last cycles, Bitcoin leads, right? Bitcoin leads, that capital flows into ETH. That excess capital in ETH flows into, in 2017 it was ICOs, in 2020 it was DeFi. 2021 it was NFTs, and then that keeps pushing out on the risk spectrum until the cycle is over. And if you look at what's going to happen next year, right? Bitcoin spot ETFs, Bitcoin halving, a presidential election, right? That could very well lead into like if the number one way for the Dems to stay in power you turn the money printer back on. I know they don't have direct control over that, obviously, but it seems like those kind of different parties of the U.S. political system are kind of converging. It does feel like sometimes. So, I mean, like, I don't know, tough to be bearish Bitcoin right now.
Yeah, no, I'm certainly not bearish Bitcoin. I think there's a lot of positive developments.
Yeah.
One of the things that, just as an aside, we had Munib from Stacks here on the pod and talking about ordinals and whatnot. I mean, I saw a note out there that ordinal activity's just gone like cratered. And so a lot of hype just has gone away. I don't know. I think it would be interesting to have someone in the pod just follow up on that point. That I know, what's his name? Uri has been very vocal around the lack of innovation amongst core Bitcoin developers, and historically there's been a resistance to kind of out innovate, and just being critical of other experiments like Ethereum and then everything else. Ordinals felt like it was sort of a sea change in terms of maybe an inflection point is saying, okay, well, let's capitalize on this. Let's innovate. Let's create kind of layer 2 smart contracts, whatever it is to create a DeFi thriving ecosystem in Bitcoin. I mean, it is probably will be in the foreseeable future, just the largest coin, the largest digital asset. And so there's a lot there that you can do. And so anyways, I'd just be really curious to keep track on. I haven't. I just saw that Ordinals went to zero again.
Yeah. Hey everyone, we'll get back to Empire in just a minute, but before we do that, I want to let you know that we have Permissionless coming up. Permissionless is a big conference that Blockworks and Bankless put on together. It is the biggest, the best DeFi conference in crypto. This year it is in Austin, Texas, September 11th through 13th. If you've been in crypto for a while, you know that bear market conferences are the best kind of conferences. We have a phenomenal lineup of speakers. A lot of the guests that you hear on Empire are both going to be speaking there. You will have the opportunity to meet them there. And a lot of the topics that we cover on Empire, ZK Tech, rollups, account abstraction, MEV, app chain thesis, a lot of that kind of stuff, that will all be discussed at Permissionless this year. So because you are a listener of Empire, you get a special discount. That's right. Santi and I negotiated with our marketing team. You get 30% off if you go to blockworks.com/permissionless. Empire 30 is going to get you 30% off your ticket. Today, when I'm recording this, that's about $300 off your ticket. So type in Empire 30 when buying your permissionless ticket. You get about $300 off. Click the link at the bottom of this episode. It's in the show notes. Do it quickly because prices go up all the time. And if you are going to permissionless, hit me up. Let me know. Shoot me a DM on Twitter. I would love to meet up with you there. Let's talk about one more win in the courts, which was Uniswap.
Yeah.
And then we can move on to the Brian's kind of like 10 things that he would invest in. So if you remember back in, there was this original complaint last year that alleged that Uniswap, I think it was Uniswap and their founder, Hayden Adams, and Andreessen Horowitz and Paradigm were responsible for rampant fraud on Uniswap. And they pushed Uniswap to register with the Financial Industry Regulatory Authority. Plaintiffs also alleged that Uniswap offered and sold unregistered securities. It would have been really bad if they won this. The court just concluded that that I think they basically just lost the Uniswap just won this basically. And I think the court said that even though they see merits in the defendant's counterpoint, that this case is more like an effort to hold a developer of a self-driving car liable for a third party's use of the car to commit a traffic violation or to rob a bank, which is basically saying that the Uniswap protocol is primarily lawful, has primarily lawful use, and that protocol devs are not liable when others misuse it. Which is actually really interesting. As we were talking about this last week or the week before with who's the guy who just went to jail? Roman, right?
Yeah, the tornado.
With tornado. So I think the trend in the courts is kind of turning here, and it's really positive for. Hopefully, this ends up applying to tornado, and yeah, I think it's been like a fear that there'd be like a bad legal interpretation of what protocols really are, and it's I don't know, it's
Right.
motivating for builders to see this, to see them get this one right.
Absolutely. Yeah, we said it time and time again. You have to believe that the courts will fairly interpret the law and the intent of, uh, the law, and so and peel back a lot of the kind of the bullying that has happened and overreach, arguably. So it's very positive. As an aside, there was a NFT project that was slapped by like promising as a deemed as security, and um, this is I forget the name of the project, but I think that there's one. I mean, I think a few of the NFT groups I'm on were a bit, you know, panicking over it. But if you look clearly at the complaint and like look at the SEC document, I mean, it was a fair amount of very aggressive language from these promoters of NFTs and developers, if you will. So this is an important just point that I want to make, which is, yeah, we're seeing a lot of positive developments in the courts, but I think because we don't have clarity, like rules in place, one, if you're a hopefully if you're a developer, you have some optimism here, but still consult with a lawyer. And there's still like I think at this point there's been precedent, particularly coming out of the ICO phase, where there's like certain things that a lawyer would tell you very clearly, hey, this is not something you should be doing. These are kind of the as we know it and based on precedent, these are kind of the things that the path that you could follow here reasonably and hope that you're on the right side, right? As many other projects, including Uniswap, right? So, anyways, it's important to make the distinction that there is still fraud happening. There's still obviously a lot of nefarious activity out there, but through rulemaking, you kind of are more able to focus on going after people that are, you know, um, committing fraud and violating the law, but you don't have these laws in place. And so, anyways,
Yeah.
just want to make that point because, you know, for maybe a skeptic listening, say, "Oh, you crypto bulls, you think that the game's over." Like, no, there's still a lot of fraud, as there is in any industry, right? In any market. But I think your ability to enforce and to protect consumers increases dramatically when you actually have clear rules.
Yeah.
And so that's what we're excited here because we haven't had clarity in the last since day one.
Yeah. Let's talk about non-regulation. So this week, a couple
Yes.
days ago, Brian Armstrong, founder and CEO of Coinbase, shared the 10 things that he's most excited about in crypto, and adding a bit of context, saying, "Look, if I was running Coinbase, so I can't go build these things, and Coinbase is big, but we're not. We got to stay focused. We can't go build all these separate things. So if I was starting over today and I wanted to go build and found something in crypto, here's what I would go build today. I'm going to read off the 10 things that kind of his crypto wish list, things that he would go build. One, a flat coin. We'll talk about all these in a sec. One, a flat coin. So this coin that tracks the price of CPI. Two, on-chain reputation system. Three, on-chain ads. You weren't on this, but we just recorded an episode with Antonio of Spindle, helped build Facebook's ad marketplace. Really interesting on-chain ad conversation. Four, on-chain capital formation. Five, a job or a task marketplace, kind of like a Fiverr or Upwork or something like that on chain. Six, privacy for L2. Seven, P2P exchange, fully on chain. Eight, more on chain games. Nine, tokenizing real world assets. 10, tools for network states. I'm curious, when you read through this and you watched this kind of presentation, what were the kind of either end of the spectrum, the most exciting, no brainer? If it was the right founder, I'd back that in a heartbeat. And then the flip side of like, ooh, yeah, I know it's Brian Armstrong, but like that one, I don't know about that one.
Tools for nation states is interesting, aggressive though. Like I read Balaji's nation states. Like
Yeah,
I get his point. I don't want to spend too much time on that, but that felt like a stretch. And and so it reminds me of like DAO tooling solutions, which
that's what I thought of. DAO tooling.
I was like,
Yeah, exactly.
I don't want to focus on that. It's just like the things that I get most excited about. And I spoke with Jesse from Base and the Coinbase team about this is having on-chain reputation is I think it's a lowest hanging fruit I think we have at this point, particularly if you deploy through Base. Like Coinbase has about 100 million users. Like they have data on all of them. And they've done their checks. They could very easily issue you an NFT that says you're a registered user. You know, you've passed KYC AML, which you could argue is not efficient, whatever. But at least it's that. It's not a bot. It's not, and so it's a real human being. And so I think that's I mean, if I'm Coinbase, like they should just deploy it themselves. There's an interesting project backed by like I think they invested in it with Variant leading called what's the name of it? Like Sesame or something, which is basically like an NFT that attests to like real worldness and
Hmm.
human liveliness, if you will. But reputation score is hugely important. I think it's gonna happen sooner rather than later. I want to say privacy as a second, but as someone that has been around for a while, like privacy is that cult, like it's like zero knowledge proofs. It is the holy grail, right? He did say something in the in the video that I actually don't agree with. He said privacy should be opt in, not opt out,
Hmm.
meaning you should designate which things you want private and not. And I think that just doesn't work because if everyone by default is not private, the people that are doing and electing to be private raises suspicion. And this happened with um, shielding, like Zcash for forever had this like opt in, not opt out, and very few transactions were actually shielded, meaning private. My understanding is if you had done that, you would have gotten a call from the government, almost like you would have gotten like inspected. And I know a few funds that did this. And then that I think then Zcash went through and did an upgrade of doing all and for context, Zcash is a privacy preserve, like a privacy first coin, like layer one, if you will. Um, but once they did an upgrade, every transaction was by default private. And I think that's what you need to have in order for the system to actually work. But on the scale of how like being practical, like how is that going to happen? I mean, I know there's been a lot of work and progress in zero knowledge proofs, but I think we're still a ways away from having like true privacy on chain. Um, so so those two important, I think, are would be huge. The implications going back to reputation um, can't be like understated because that would increase efficiency in DeFi. That would allow for think of permission DeFi environments where you're still settling on an L1 like Ethereum, right? And you still have that guarantee, but you know who your counterparty is. You can you can go and talk to a lot of large financial institutions, and they would most likely get more comfortable of interacting on chain. The Visas, the JP Morgans of the world, to use something like Ethereum and use an AMM like Uniswap, but an implementation or a money market like Aave or Compound where you know everyone, where everyone's a verified user and has some sort of reputation score, i.e. credit score plus, right? Now, mind you, that I think is where DeFi is really going. That's what I'm really excited about. I just backed an L2 that is very focused on this because I think this is the path forward to getting a lot of like the
Same.
traditional
Yeah.
system on chain.
Yeah.
So those are the main two. The third one that I just want to touch on, and I want to hand it over to you, is marketing. And I've said it before. Just today, actually, there was a company that was backed by Kindred Ventures, and there was Elad Gil and a bunch of other folks like backed it. I think it raised 4.3 million to, I think, presumably like focus on this segment of the market, which is um, as more and more non-speculative pure use cases emerge. Like Jesse from Base was talking about, like having like an open table on chain where on base where it went, which I think is the point where you, as soon as you go to restaurants, you check in, you get an NFT, and like there's some sort of reward system in place, and you can pay with a stable coin. So a lot of these things start clicking, right? Um, that very easily lends itself to marketing and a whole ad network behind it. Um, and referral programs, right? Which I think some crypto native projects and DeFi have done this. Like Yearn, for instance, has referral programs like a wallet like Argent. If Argent funnels money to a Yearn vault, there's the smart contract detects that, and so there's a commission paid out based on the fee. All of that is going to be a massive, massive industry, particularly when you think about the challenges of cookies in Web 2,
Yeah.
which have basically, in some jurisdictions like Europe, have like been heavily impacted. Not only that, but it's like blockchains are transparent if you don't have privacy. And if you issue an NFT to someone, when they walk into your store, they go to your restaurant, they fly, whatever, um, and the NFT just commemorates that activity. Well, all of a sudden you have access to all that information in the wallet. And if you're a brand, like your ability to target and stitch together maybe Web 2 data or Web 3 data is is a huge advantage. And any marketer that is looking at this and appreciates that, I think just jumps out of his seat and says, "Wow, this is the next this is what the next wave of marketing looks like."
Mm.
Right. And I don't know, those were the things that I was mostly excited about. I think all of them made sense, but these three were again the
Mm.
reputation, privacy, and marketing, like a marketing, like a ad network, if you will. The marketing and reputation, practically speaking, can be deployed and I think can work like today. Reputation, like privacy, is something that we've been working on as an industry for a long time, and so it will come. I think it's just gonna it's farther out in the spectrum.
Yeah.
What do you
I
think?
agreed with you. I liked all these ideas, honestly. I thought they were all pretty good. There were, I tried to force myself to write down one pushback for every single one so I can go
Okay,
through those if you
let's
think
hear
it's
'em.
interesting. But just to start with the ones that I liked, so on-chain ads are a no-brainer. Basically, Web 1, we had CPMs. Web 2, we moved to CPC, cost per click, right? So initially, Web 1, you pay for the impressions. Web 2, you pay for the clicks, right? Web 3, and this is as someone who's a lot of our revenue comes from advertising. It's nearly impossible to do this in the traditional kind of software stack that Web 2 has right now and that we're built on top of, is going from CPM to CPC all the way to CPA, which is you only pay someone when they buy something or take an action on chain.
CPA,
So
just for listeners, cost per action.
cost per action, exactly. So we've gone from cost per milli, which is fancy way of saying 1,000, to cost per click, which is like how Facebook and Instagram work. To in crypto, you can go to CPA. And what's even cooler about that is it's not just paying out the person at the bottom of that stack. You pay out along the entire
Yeah.
stack. So let me give you an example. Like, so the advertiser of this episode, let's say an advertiser for this episode, and we drive you hear the advertisement, and you're like, oh, that sounds really interesting. You go to Google, right? You go to Google, you type in that advertiser's name, you then submit a form on their page. We as Blockworks don't get credit for that. They have no idea that we sent you because they went to Google and clicked on that. But if a lot of that is happening on chain, not the podcast, obviously. Podcasts aren't on chain right now, but like if that kind of action, like you go here, then you go here, then you go here, and that's all on chain, that is you could basically pay out all series of the funnel there. So I think that's pretty cool. I actually think the job task
On
market.
this point, like it
Yeah.
dramatically increases transparency in marketing. There's a famous saying, right? Which is marketing works, you just don't know.
You just
Like,
don't know it's working on you. Yeah.
yeah,
Something
or
like
like
that.
is this the glass half full or not? Like it's like in understanding the funnel behavior and user behavior is impossible. So brands have
Oh, you're talking about half my advertising spend is wasted. The trouble
yeah,
is
exactly.
I
But
just don't know which
I
half.
just don't know
Yeah.
which one half.
Yeah.
And the problem is that,
Yeah. John
you know,
Wanamaker. Yeah.
exactly. And so like and the problem is even worse, right? If you go to Amazon, they don't share the data with you. And so a lot of that transparency of the funnel and how users find you and how they interact with your brand. And I mean, and the conversion of that is, and the checkout of that, like everything in the funnel from discovery to checkout will be dramatically like see dramatic improvements because of crypto. Um, and not just paying through stable coins, but even farther up the funnel, just to discovering the trackability of that with tools like NFTs is just gonna be huge.
Yeah. So I like my bet on crypto has always been that the world's becoming more global and more digital. And crypto is the easiest bet on that. Like if you try to like take out all the kind of institution things and kind of the libertarian in me, like if you're making a simple bet and you're explaining it to a simple person, the world's getting more global and more digital. This is a bet on that. And I think some of Brian's things really hit on that, like the job task marketplace for crypto. There are
Look at Fiverr, but
yeah,
with stable coins layered in, and
for
again, everything ties into reputation. I mean,
yes, I do.
yeah.
I do. That has to come later though. That's not you need people doing things on chain first, then you can build a reputation system. You can't build a reputation
Right.
system if so you have to pull people in,
Well,
give
you
people
you you can port you can port Web2 data in through, like, of course, you'd have to argue
I'm
that
just
that has
bearish
to
on things that
be
rely
encrypted.
on like
True,
that's why
true.
like real world assets is like man, I hope it works, but like you're relying on a non-digital thing. So I don't love like, hey, we need to build credit scores on chain. Like, let's go pull in from Credit Karma. Um, so
It's
I mean, you
it's
can
an
kickstart a
endpoint.
network like that, but yeah,
I think you kickstarted that way, and then the percentage and weight in the algorithm to predict credit worthiness or some other measure of reputation, the percentage of on-chain activity can be very quickly the dominant the dominant weight in the model. But I wouldn't be dismissive of porting Web2 data into the mix. Now, places like the US have a lot have
yeah,
better systems and data feeds than other places just don't have it, right? Where you have informal economy like in India, well, it's challenged.
yeah,
But, but it's not impossible. I mean, when you say like there's a startup, for instance, that started lending out, started, creating a like a micro loans, like a like Grameen Bank in Africa. And they were using like smartphone activity. If you're charging your phone, the type of apps that you have, if you're paying your mobile consumption in time, like those sort of things are arguably better predictors of credit worthiness than like experience, like your typical credit score. But anyways, an aside.
the just a like last point on this one, the like job
Yeah.
task marketplace. If I told you that there was a market that was growing 71% year over year, it's completely global. And it's the buyer on the other side is not consumers, it's businesses. Like I think that's exciting to anyone, and that's the freelance job market today. So like
Is that
freelance,
Fiverr? Like, what's
uh,
wrong with Fiverr?
have you ever used Fiverr?
Yeah. Oh, I've tried.
Fiverr sucks. I actually use I use Upwork sometimes.
Sorry, Upwork. Yeah, Upwork, Fiverr. Like
I
these.
use Upwork for like weird miscellaneous. I mean, I actually don't really use it anymore. I use it for now like Claude.ai has taken that.
Okay.
I use that instead of Upwork, but I don't know the like freelance marketplace, the freelance just industry is growing and market is growing so fast.
Mhm.
And most of these platforms are not that good. Whether that's like a crypto thing or Web2 thing, maybe it's really tough to
Yeah.
build one of those marketplaces.
Well, let
But
me ask you a question. Like, if you're the Upwork management listening to this, what could you do? And maybe it's just accepting stablecoins. Like, what else? What else would you layer on in terms of crypto nativeness that Upwork is missing? Is what I'm trying to understand. I think the payments, and Brian
yeah,
brings insight
I
with
see your
this.
point.
The
That's a good
payments
one.
is just huge, right? Because there's always a cut, the interchange fee, like the commissions, like the processing, the settlement, all of that back end is hugely inefficient. You could just use a stablecoin and pay with USDC, USDT, whatever. You know, I think that's something that should be done.
Yeah.
And then particularly for the talent that lives in places where it's difficult to have a bank account, or it's difficult to, have a local banking network, and, like, all that stuff just poof, like, you don't
Yeah.
need it. Reputation's important, the verification of that and the quality of the work. I mean, I think there's bots in crypto, and so I think proving proof of humanity, proof of work are important concepts in crypto that we've had to deal with. I think the proof of work aspect is there for machines, but not so much necessarily for humans. Like DAOs have struggled a bit in like grading the reputation of contributors. Um, you could look at Gitcoin and say, okay, this is an interesting grants program. A lot of the same a lot of the grants are doled out to the same recipients that, over time have produced like quality work. And so there's some data there that is useful and interesting. You always have the issue when it comes to reputation around, like, there is this dynamic of when you read reviews, a lot of them are dissatisfied customers that take the time and effort to actually write a review. So it's skewed on the negatives. And I think that's a problem with some sort of, when you look at reviews, a lot of the activity on Twitter too is negative, skewed negative. Like it's just very vocal minority that expresses dissatisfaction and anger and all those range of emotions, particularly in bear markets. But yeah, the it's challenging. Like I think as we think about like non-speculative use cases like these, I think I always wonder, like, why hasn't it been possible in Web 2? Could you introduce certain things in a Web 2 business model? Or do you have to totally reinvent it from scratch? And this is not just for job markets, it's really for everything. And I think it's an interesting exercise to go through. Like banks, you could argue they don't have to blow up, right? They could just use on chain to do settlement, which is huge, like, or to do process, like, to expand their market and reduce overhead from compliance and operations and streamline all of that. That's a huge material impact that I think, their ability that then allows them to cover more market, extend more loans, do whatnot. But I think that the linchpin there is reputation.
Yeah.
And the
The
problem
one
with
that's
that
probably going to
is
have
in
the
crypto, you
biggest
don't have that.
impact, probably honestly, the one out of all of these that would have the biggest impact is the flat coin.
The
I just
flat
think it's,
coin,
I just think it's also the
ample
hardest
fourth
to
of
do,
sorts.
right? Like, you know how much
Um,
money has gone into this trying to do it, and like and I think the challenge here is, so a flat coin is one that tracks inflation accurately,
some
right?
sort of, yeah, purchasing power inflation. Yeah.
I mean, first off, how do you get that economic data into
How well
like
the calculation of that has just been
CPI?
morphed.
Like
CPI.
CPI
How
is a
many times have they
broken
changed the
metric.
definition of CPI?
Yeah. CPI is a completely broken metric. So, like, are you tracking CPI? No, you can't track CPI because that doesn't accurately track, the
You
American
track the
consumer's
price
inflation.
of Costco hot dog soda combo or
Yeah,
pizza
because that stays
soda
flat though.
combo.
That stays flat.
No, it's a
Yeah.
$1. It's $1.50 now. It's not a dollar anymore.
Hey, have you read the quote? Jim Senegal, the Costco co-founder, you know what he once told the company's current CEO, Craig Jelinek? If you raise the effing hot dog, I will kill you. Figure it out. And then another quote, I think a journalist asked him, when is the price of the hot dog gonna increase in price past 150? He goes, when I'm dead. So
Right. Well, okay, the Big Mac index,
yeah, no,
if
I
you
know what you're
will,
saying. I know what you're saying.
But it's challenging. Obviously, there's ample fourth, which I looked at. I just never invested. It was just sort of
It's
a
just
debate.
hard.
Yeah,
There's just been a lot of these, right? You have to
it's
track
hard.
real world inflation, but then it's like, well, where's real world inflation coming from? And then it's like, do you create one of these for every country, or are you just doing it off the U.S. dollar? Because like, infl- inflation against what, you know?
Yeah,
So
yeah. No, certainly. I mean, there's like deflation in China. There's 300% inflation, 600% inflation in certain places. So yeah, it is challenged. Um, I do agree with you. It is kind of this unsolved holy grail in crypto. Privacy and having a stable coin that is not tied to fiat is I think the most perhaps two of the most ambitious things that we can work on a truly digitally native, like, global system. that
You know,
transcends local
the
jurisdictions.
one that feels the most accomplishable. Why is a P2P exchange, a fully on-chain P2P exchange, so hard? I'm sure it's very hard from an engineering perspective. You know, it's probably the incentives are broken for that. Because if you want to go build an exchange, the market's not going to reward you for it.
I mean,
For building
he
a
mentions
peer-to-peer
that he doesn't.
exchange.
Okay, an AMM. What's an AMM? An automatic market maker like Uniswap or a money market like Aave and Compound. Now, I think it's not strictly peer-to-peer because you don't necessarily know the peer, you're trading against the pool. So it's an aggregation. But I would say that to me is maybe that's where we land because matching, like, what was that company that went public that did loans, like peer-to-peer loans? What was the name of
I
it?
don't know.
Based in San Francisco. I got a buddy of mine that ended up leaving JP Morgan to go work there. But like Prosper, well, Prosper didn't go public. I think you had Prosper and then another company. And at some point in that assembly line of matching an independent borrower, like they acted as an intermediary to dish out those loans. Initially, they started purely peer to peer, but over time they morphed into something like what is now a pool, which is they would as soon as they got scale, they package all of those loans and then they sold it off to a hedge fund. In a low like interest rate environment, that model was fabulous for a hedge fund to capture meaningful yield. Um, the problem was adverse selection, and the people that were using it were like you couldn't get a typical loan, so then they're much riskier people. And so, anyways, the scale of peer-to-peer marketplaces is always hard. I would say I'm content with the hybrid model, if you will, of what I consider to be a, um, a good balanced way of these marketplaces, which is an AMM and a money market that you see in DeFi on chain. Like that to me is a huge novelty, and I think it's great. I mean,
Yeah.
I don't like what else would you want to see in a peer like a P2P exchange? Like what activity in the economy would suddenly jump 10x because you had an on-chain P2P exchange? I just don't see it. Like, you know what I mean? Like what would it be?
I mean, it's probably something that you can't see. It's probably in emerging and less developed markets, right?
True. Yeah, I guess. I guess. The thing about that we haven't touched on a lot is this real world assets, which is in some ways a P2P exchange. If you're not trading like an NFT, like a digital thing, it's a physical thing, and that's a real world asset. And so you don't have a reputation score. Who's going to be the oracle? Who's going to enforce that? These are all questions that I have, which is when you think about marketplaces for stuff like an eBay
Yeah.
or an
Yeah.
Amazon. Like, I mean, it's tough, right? Because you have real world like atoms meet bits. It's complicated. Like with real world assets, right? I mean, I think with real world assets, most people are excited about, you know, having institution A trade with institution B on chain, or institution A, say a company has a huge amount of accounts receivable, they want to put that on the blockchain, and then someone syndicates that, someone sells that. Like that feels more doable than a Craigslist sort of Amazon marketplace on chain. Like I don't see it.
Yeah.
Maybe
I mean,
Amazon and all these web again. I'm saying most of these marketplaces would be benefited in the amount of activity, less fraud, faster checkout if you had stablecoins. If they allowed stablecoins.
yeah. Which, by the way, is stablecoins are the best example of real world assets that we have, right?
Yeah, exactly. I mean, they're regulated. There's a dollar that sits in a bank account like a USDC, like Paxos, whatever. Um, it's going to happen. It's already happening. And I think the Web2 brands that all of them have struggled with denying certain customers from certain places. The credit cards get rejected for simple reasons, like because the credit card is in a country that, I don't know, it's whatever, Nigeria or whatever. Doesn't mean that all of
Yeah.
the transactions are fraudulent. It's just there have been attempts from Stripe and Shopify and all these players to reduce the false, what is it, the false positives, um, and do faster checkout, and which is a huge problem. So, anyways, churn, right? If you're a SaaS company, a software company, or a news, whatever type of subscription that is happening, I can't, like, the amount of renewals that don't happen because that underlying customer changes payment information and doesn't. It's just like it's so obvious that when you have a smart contract and account abstraction, like all that is billions of dollars that that have just are left on the table. It's the lowest hanging fruit. Payments is an area that when you first come to crypto, at least for me, was like it was only Bitcoin, and so you said, "Wow, this could be a really interesting medium of exchange." And then you realize, no, you know what? I don't want to spend my Bitcoin, playing poker nights and
Yeah,
like
remember all the
10
e-commerce attempts
BTC.
back in 2018 failed because no one wanted to spend their Bitcoin and then no one wanted to spend their ETH.
So Bitcoin is not money because it's not a medium of exchange. Not a very good one, I think.
Yeah.
But stablecoins are.
Yeah.
They are.
Santi,
So,
man, good pod. I have a final round interview in 1 minute, so
oh wow, you're hiring a
we
lot,
are hiring
right?
sales and engineers, salespeople and engineers. Get at us. Slide through the DMs.
Is this for the research product?
Whole company. We're hiring one engineer for the editorial site, and then a bunch of folks on the for the research, governance, and other thing we're launching in 2 weeks at Permissionless, and then
Oh,
yeah, and then we're hiring for sales across the board. So
very nice. I'm just gonna say one thing. I've become a subscriber again of YouTube Premium. I think they didn't allow it in your. I don't know. Huge game changer.
same.
Like I love it. I am now consuming so many videos. Like I was driving for like 8 hours or 7 hours. I just played pretty much every interview from like Bill Ackman, Seth Klarman, like Howard Marks. I was just like, and then constantly, it was just amazing. It's like it's huge. I mean, education is going to be. YouTube is the best university in the world. It is crazy.
YouTube Premium is a good investment. What, 10, 15
I,
bucks? Get the ad. You can
it's a good.
download it too for planes.
Yes,
Yeah.
for exactly. That's what
Yeah.
I'm saying. Anyways, that was I've been hooked on YouTube Premium now. I'll make streaming all day. So that's my generalized thing that I video or book.
Nice.
What have you been? Anything noteworthy on your side? No.
No. I've been like I've been
Focused on
I've been
Permissionless.
watching Hard Knocks, the football show. I've been like needing to turn my brain. I've been working too much and trying to turn my brain off at the end of the day. So I've been watching Hard Knocks.
Not bad.
Yeah.
All right, folks. Hopefully we didn't give you brain pain in this episode. Leave a comment. I am reading them. More people commented last week. Absolutely. Now that I'm YouTube Premium, of course you know that I'm going to be reading them. Drop us a comment if you want us to talk about a particular thing or not. Otherwise,
all right, we're gonna kick off the next episode, the next roundup. We're gonna read some of the best comments.
Absolutely. Yeah, that's a good idea. All right, folks. Thanks for tuning in. Have a great rest of the weekend. We'll see you here next week before the last one, before the big day, Permissionless.
Let's go. See you guys next week.
Let's go.